All right, we're going to go ahead and call the Finance and Planning Committee meeting to order. Thank you, everyone, for being here. We do not have a quorum, but we actually do not need a quorum. There'll be no action items taken. This is a committee meeting. And in fact, we will shortly have a quorum. I think Dr. Muniz is on his way, but doesn't necessarily matter because this is a Finance and Planning Committee meeting and there's no action that will be taken. So we'll jump right into it. I guess, I don't know, Dr. Cortan, do we have any comments for agenda topics, public comments for agenda topics?
No public comments this evening. Thank you, Carrie.
Okay, wonderful. All right, then with that, we'll go ahead and jump right in, and I'll ask, I don't know if Dr. Cortan or Mr. Mendoza, you're going to, we'll jump right into the fiscal planning presentation. Thank you,
Thank you, sir.
Yes, sir.
So good afternoon, Dr. Perez, board members, Dr. Cortan. This is our third meeting on our fiscal planning. So our main focus is always to align all of our goals to our strategic plan on this particular slide. Our next slide, again, contains our action items for responsible planning, and we will be discussing several action items in the next few slides. So the next slide contains our influencing factors of fiscal planning. So our current enrollment is 16,509 students. Last year's snapshot number was 16,780. This is a variance of 271 students, which translates to approximately 1.7 million less in revenue. And compared to our previous meeting, we have gained 23 students as of our last report. In addition to that, we also control our attendance. So we're focusing on our attendance based on our revenue projections. We project 93% attendance rate for our district for this 24-25 school year. Currently, we are at 94.69%, which represents a 0.3% increase from last year's attendance rate. Next slide, Dr. Cortan will review this particular slide.
Thank you, Mr. Mendoza, for that opening. I do want to celebrate the 23 kids of increase since last month. That's always a plus, right? And then secondly, I want to thank all of our teams, particularly our campuses and Sylvia Gonzalez, for their efforts around attendance. We know that from last month's conversation, those two levers are critical for us to monitor every month, and those are going to be a staple in every single one of our committee meetings. So the next part of our presentation, Mr. Mendoza is going to talk a little bit about some fiscally related items, but I wanted to stop and just talk about the power of reflection. Any time that we look at continuous improvement cycles, you always start with a reflection. And so there's power in pausing and looking at where we've been, where we are today, and where we're going. So part of the next segment is going to be just that. As we have been preparing for the fiscal year for both this year and next year, we've had a great opportunity with this committee to come forward and start that planning process way early in the year. We typically start in about April. This year, new to our structures, we are able to have really a year-round committee meeting so that we can plan for our fiscal year, like I said, the current and also future. But the power of the reflection is that we're going to start by looking at last year's expenditures, lessons that we've learned from last year. We're going to look at what is going on right now with our current fiscal year, where we are. He's going to give you a little bit of an update on some action items since last month. And then most importantly, we're going to go and look forward, look to what the future is going to hold. Certainly this committee is critical to the work that we're going to be doing, but we wanted to start there because there's a lot of value in looking at, like I said, where we were, where we are today, and where we're headed. So I'm going to hand it back over to Mr. Mendoza so he can start with a look back at last fiscal year.
Perfect. Thank you, Dr. Cortan. So as Dr. Cortan mentioned, so part of the planning for next year is to review what transpired last year as we get ready for this coming year or this year. So this slide contains financial information that impact our 23-24 fiscal year. First item of which is our state revenues. So we have been working with Lineberger, in particular to appeal our 2023 state values, property values, and they were able to reduce those values by 271 million, which translates into a $2.8 million revenue in state revenues. This does, it doesn't include our ADA. This is just the appeal for our property values for this 2023 tax year. So that's one. Item right next to it is our security budget. So we began with a $3.2 million security budget, initial budget. Actual expenditures for this particular line item was $5,982,832, which was a negative variance of 2.6. Again, this includes a new initiative, including our guardians as well for that particular security program for our district. Next item, we have our ESSER capital outlay. Our budget was $15 million. We had expenditures of $21.2 million. Of that, the bulk of it included the roof project for the particular campus at high school campus. That was just a little bit over $4.2 million. In addition to that, we also had in 23-24, we had a salary increase, approximate cost of $2.1 million. Again, we spent those funds. We were expecting some help from the state, but that did not happen. In addition to that, we budgeted $3 million in charge revenue. Currently, we have collected $1.1 million in charge revenue. That's a negative variance of $1.8 million. And that is due to the fact that there were some modifications by the Texas Health and Human Services Commission, resulting in $400 million in less state funding for all the districts in the state of Texas. So that impacted in a negative manner as well. In addition to that, we budgeted $36.7 million in local tax revenue. We collected $33.1 million. That's about a 91% collection rate. Currently, in past years, for our current tax collection, we usually average about 96%. If we take our current and delinquent tax rates, we average about 98%. So we're a little bit under as compared to previous years. The next 3 slides contain additional financial information, which include additional personnel costs, expansion of programs, and technology refresh for our high school campuses. Those numbers are as follows. We had additional personnel of $827,000, and we discussed that during our budgeting process. We had an expansion of programs of $476,063. In addition to that, we had a technology refresh lease. Those items, technology items, were received before June 30th, so we have to account for that particular expenditure as well as the proceeds in fiscal year 23-24. Approximately total $19.9 million in variance in this particular slide.
So could I ask a couple questions?
Yes.
I just want to make sure I understand. I think I understand this, but I want to make sure. So obviously, the tax revenue, obviously that's a variance because, I mean, that's a less revenue we got in. So
That is
that's why
correct.
that's a variance.
Yes, sir.
And then the SHARs, because we were supposed to get 3 million.
On average, we budget about $3 million, and we're working with our SHARs vendor to rectify that and increase that as
So in this case, this is a revenue, not an expense. So in
That
this
is correct.
In this case, we only took in 1.123 in revenue.
That's
That's why the variance is,
That is correct.
that's why it's a hit to the budget of 1.874 million.
That is correct, sir.
And then the salary increase, we had increased the salary to 2.1, expecting some state money
Yes.
that we never got. Is that correct?
That is
Okay.
correct.
So
Yes,
I just want to be clear as to how they became a variance. Okay, so,
Yes, sir, that is correct.
okay, thank you. So total for the year, almost 20 million, just with these. Are these all of our, are these all of our sort of, or just our largest variances? Or how would you categorize, this is not a, is this sort of a complete list, or? this
Most
is-
of our largest variances are included in this slide, sir. That's correct.
It's not in its totality.
That's right.
Just because we are continuing to study it. what we have been able to determine is these are the variances that we were already able to say, this is what we budgeted for, and this is what was realized, and here's the variance. So we anticipate that there's going to be a few more line items.
Okay, but we have no idea. Is that 2 million, 3 million, 4 million? We don't know yet.
Go ahead.
It may vary. It usually, the over expenditures was around 23 million, so it could be about 3 million more.
Okay,
Yes.
got it. So in other words, this, I imagine, will have a lot more color and detail with this when we have auditable
That
fund
is correct.
balance and
That's correct.
auditable numbers next month.
That is
from
correct.
From our
Yes.
external auditor, is that correct?
That is correct, and as a matter of fact, our external auditor is here. He'll present later on in this presentation.
Thank you.
Question, Mr. Mendoza.
Yes, sir.
So going down each line, everything with the exception of the last 3 line items have a budgeted amount, and there's a variance based on the budget that was approved by the board a year and a half ago.
That is correct.
The last 3 items don't include a budgeted amount, including a $5 million line item, almost. What was the technology refresh?
So
Were
these
those
were,
iPads or?
so these were iPads for the high school campuses. We were projecting, it's a lease, so we were projecting to receive those after July 1st. We received them before June 30th. So as a result of that, this is a lease. We have to record both the expenditure and the proceeds for this particular lease.
Okay, so
The
that's.
lease payment occurred on July 1st of this year.
So that's an example of a carryover, but there were funds programmed for that in the previous school year.
So this is a particular new initiative that we did not have budget for.
So that just happened.
That is correct.
Okay,
Yes, sir.
yeah.
And just to kind of offer some insight, and Dahlia oversees our technology department, so I'm going to let her jump in here where she needs to. But we have standards for how often we're going to do the refresh. And so I don't know, Dahlia, if you want to talk a little bit about the refresh and how we typically do that.
Hi, good afternoon. Our technology refresh, you do see that line item there at 4.8. Does encompass refreshing all our high school devices. So all our high schools were outfitted, our comprehensive high schools were outfitted to support our one-to-one devices. So they did receive brand new iPads outfitted with insurance cost for the Apple Device Care. It also included refreshing some devices that were outdated already for our teachers. So our teachers also received new sets of MacBooks to help support their work with the students with the iPads.
Thank you.
We are looking forward to revisiting our technology replacement plan to probably extend that a little bit more into a 6-year technology replacement plan because it can be costly. We just have to ensure that our system requirements and our device requirements are up to par with state testing guidelines as students move into online testing.
Thank you. What was that expense in the 22-23 budget? The
No, sir.
technology refresh?
No, it was in the 23, 24.
It was in 23-24.
Yes, sir. Both the
Okay.
expense and the proceeds for that particular line item.
I guess that's where I'm not following. So we took the expense.
But we also recorded the proceeds as part of that lease entry that we have to make. And
Okay.
Mr. Montemero was very involved in that as well.
So because it's a lease, it's not an asset that there's not an offsetting. It's not going onto the balance sheet. It's a rented item. Do we give those back? when it's
No,
done?
as a matter of fact, we are in the process of implementing, and we already have a buyback program
Okay,
for those items.
okay.
So was the mistake made? So why did we not budget? Where was the problem
So-
here? Was it something that we should have budgeted for, but we didn't?
Yeah.
Or it's just something that we shouldn't have done because we didn't have the money for it? Can you explain?
gonna-
So yes,
Good.
I should have budgeted for it before the year end. But since I was thinking that the machines were going to come in after July 1st, I didn't budget for them.
I'm going to back up a little bit because this might answer your question. So when Mrs. Garcia is talking about the technology refresh, when we set aside monies, it's based on their projections of how many devices do we have that are already going to be up every year. They have an idea of how many devices are going to be up for that refresh. And when we build the technology budget for the renewal or the refresh of those items, it's based on that. They have a database that says, like, this is where we are with all of our devices, and this is where we're headed, right? In this case, the budgeted items that our technology department had did not include that expenditure. That was not on their radar, or that was not part of their refresh for last year. So those items that we purchased were outside of a typical refresh. That's correct, right, Dalia?
Yes.
Has this
So-
ever happened before? Because that's a lot of money that's a big thing not to budget for. Has this ever happened before? And how do our internal controls break down to where we don't account for that kind of expenditure?
I can tell you that the biggest expenditure that we had that I can recall on technology was when we had all of the pandemic going on. And so that spring, the spring break that went on forever, that was the spring where we had probably the largest purchase of items that was outside of our norm, our budgeting norm. But obviously, I think everybody knows that we were already going to go remote, and so we needed to purchase those items so that we could keep instruction going for kids. Outside of that, I don't recall any time that we did anything outside of that refresh cycle. At times where we have had, I think of like blended learning. Blended learning called for a particular set of like classroom sets of iPads and things of that nature. But when we do something outside of the refresh, it's typically tied back to something in to that effect, right? It's typically not outside of this type of expenditure outside of the refresh cycle. And when Mrs. Garcia talks about the refresh cycle, it's when we think about fiscal responsibility, it's setting those standards and making sure that, number one, we're going to budget for that. But number two, we also have to track the life of each of our devices, because at one point, those, particularly the iPads, they seem to need to be replaced pretty quickly, right? So that's kind of how we decide what is going to be refreshed and what does that look like for the upcoming year. Does that kind of?
May I ask just a follow-up? So our current refresh cycle, you mentioned that it might have to move to 6 years. What is it currently?
It was on a 4-year. We were looking at, like Dr. Corton mentioned, we did purchase a bulk of devices during that pandemic. And so now we're into the 5th year, and so we're revisiting some of the devices in terms of age, and we certainly did have some that were aging out, and so this came timely to replenish the cycle and then start moving some of those old devices out, and some potentially eligible for buyback, like Mr. Mendoza was referencing. We do have quite a number of devices that we're able to leverage to submit to our vendor for a buyback, and some of them could be, depending on the grade of the iPad, they could give us $100 return for the device. Again, depending on the device, the usage, and if there's any cracks or screens, they start grading the devices. And so we use that money, we leverage those monies to pump back into the system so that we can purchase additional new devices that have that device care. So it's kind of a continuation of technology refresh, but also leveraging current devices that we could submit and, use that towards new devices for replenish.
And so we're leveraging those particular buyback proceeds as well as IMA funds to fund this particular purchase as well.
And then can you help us understand, how did we get so far off with our tax revenue expectations? That's 3.6 million is a lot. Can you shed a little maybe color on that?
So part of it also included in here is we had high number of refunds this particular last year. So we had a high number of refunds that impacted our collection rate this past year as well.
I mean, I don't recall us ever being that far off. Maybe our
Yeah.
external auditor can give us
So,
some.
so this is just our current collections rate. I did not include our delinquent collections rate, but together we should be higher than 91%.
Does that have something to do with compression as well? So, I mean, we're not taking as much from the local community, but we're receiving more from the state than we budgeted for. So they're making up the difference, the state, or attempting to?
Well, they make up the difference because of the compression rate, but this is actual collection rate on our actual levy based on that compressed tax rate.
Okay.
Yeah,
Yes,
but
Yeah.
it should be the same. I mean,
It should be.
because-
Yeah.
Because the value's going way up, it's times a lower tax rate, but it should be pretty balanced out.
So yeah, it was just a low collection rate for this particular year on those taxes.
Yeah, because the
Yes.
property valuations shot up.
That is
Yeah,
correct.
it's-
Yes, sir.
Getting harder.
Yes, sir. That's correct.
And then, okay, so then I don't want to belabor the point, but I guess by next month, Dr. Cortani, I guess in the business office, y'all will have, it sounds like 3 million, give or take, more sort of variance, if you will, but they're just, you're not ready to present them because you don't have the details.
That is correct.
Or exactly you're still going through all those numbers to understand what they were,
That's correct.
what those other expenses were that were over budget,
Sure.
basically. Because these are all variances, these are all over budget variances, essentially.
That is correct.
That basically,
Yes, sir. That is correct.
got it, thank you.
Mr. Chairman, if I may,
Please.
just clarity question, hopefully it's a simple question.
Yes, sir.
I think I understand what's going on here. Basically, on the left side, except with the exception of the last three items, we budgeted, and the numbers are there, right? So if we go down to the salary increase, we budgeted for 2.1 million. The actual expenditure was 2.1 million. Wouldn't the variance be zero?
Well,
Did I miss that? Did I miss
Yeah,
that?
yeah, you missed that. Here, they were doing the salary increase based on an offset that was supposed to come in from the state
Okay.
that never
Revenue
came in.
projection.
Okay, got
So
it.
those funds never came in, and so that it became a pure hit to the budget, basically. And then the other one, the SHARs, that's revenue, and we only got 1.123 of revenue instead of 3 million, so that's why it's a 1.874 revenue hit, right?
Got it.
And then the bottom ones were zero,
Yeah, I
right?
get-
I mean, we
yeah.
weren't- It wasn't supposed to hit the budget, but we had personnel hires, program expansion, and then this technology refresh that was an unexpected hit to the budget.
Got it.
And I don't know if you were here whenever Mr. Mendoza spoke about the SHARs, but we projected that 3 million. What we got was a 1.1, and that was partially a result of an audit at the federal level, and so things kind of changed a little bit. So that's the variance.
Thank you.
And that was a statewide
We
impact
asked the
to all
same
of our school
questions, and we saw the
districts.
same thing.
Thank you.
That was a statewide impact.
Mr. Chair, may I ask one more question?
Please.
On ESSER, there was, multiple cycles of ESSER, and so it was multi-year.
That's
But-
correct.
But, so we did not have any unexpended previous year funds? This was all overage?
That's correct, yeah. So for capital items, we had a budget of 15 million. We spent 21 million as part of those capital items. The bulk of it was HVAC products, roofing HVAC units, as well as major replacement of the roof at our high school campus, Cardinal campus.
So would it be fair to say that we kept approving projects, not knowing that these older projects were going to come in over budget, and then it all caught up to us at the end? Is that one way of looking at it?
No, the project, for the most part, did not come over budget. It was just additional projects that were added to the ESSER funds.
So we added on additional projects that we didn't have ESSER funding for.
That is correct, yes.
I don't ever recall those discussions.
Okay.
Yeah. So we're going to have to just get better of communication to,
Yes,
going
sir.
forward. Okay. Go ahead. I don't know who's got the next slide. Sorry.
So our next slide is what are we doing moving forward as far as our commitment for the 24-25 school year? So currently, we have 3.3 million approximately in potential savings this year because of the following items are not going to be budgeted or spent. Particular $3.1 million in purchase of vehicles for this that we purchased this past year, 23-24. So those expenditures will not be allocated or expended in 24-25. So that's produces a $3.3 million savings for the 24-25 fiscal year budget.
So the biggest item there is the bus expense.
That is correct.
Would you just give us an idea what the condition of our fleet is, just for the community? to know?
So yes, I believe, based on the current conversation, about 60% of our buses are fairly new.
60?
60% of our buses are fairly new. Yes, sir.
New means 1 to 3 years old?
That is
Or-
correct. Yes, sir. Yeah. In previous year, we've had leases as well to replace those buses.
So they're in good condition?
About 8 years old.
Okay.
Mr. Chairman.
Yes, sir.
Mr. Mendoza, if you don't have this information, maybe you can get it to us, but what was the 2023, 2024 consulting services amount? Because 150,000 doesn't sound like much. And maybe we can see that variance, that change that we're looking at from 2022, 2023 to 2024, 2025, because that really doesn't sound like a decrease in much.
So I can speak to that a little bit. And yes, we can absolutely get you the variance of what consulting contracts look like from,
Sure.
I guess, the last 2 years. What we did here is we looked at what expenditures are we not going to incur this year? Because part of our work right now is to look at every expenditure and look at every line item to make sure that what we're going to encumber is going to be what we need. So when we did that, this is just the first layer of where we're going to change modify some of our expenditures. And what we looked at is consulting services for $150,000, not to say that that's the only modification we're going to have, but right now with our first layer of review, we already know that we're not going to absorb those 2 consulting contracts that equal to the $150,000. And then the other thing with the purchase of vehicles, we're saying, like, we're not going to purchase any vehicles, so we're not going to need to have, we won't have that 3.1 million. And then at the end there, when we look at technology and equipment, we've already done an assessment of that, and we already know that 141,000 that
Sure.
one of the expenses we incurred last year will not continue to this year. So that's where we got these 3. I will say that that's the first layer of it. Every month that we come back, we'll be looking at where are we with our levers? Are there more modifications that we need to make? And if there are, we're going to make those. But every month, it's about making sure that in our business office, they're going to monitor the expenditures and monitor what, if any, variance. Because when we hit a variance, that's Mr. Mendoza's cue to come back to that person submitting that request so that we can study it and say, yes, you did have the budget, or no, you didn't, so we need to come up with a different plan of action. But I think that's probably the biggest value of this committee, is that every month that we come back, we're going to bring more information about where are we with our current expenditures and where are we within the budget, within the adopted budget.
Thank you.
So our next slide contains our completed action items for current fiscal year. So what have we done? So we have been right-sizing our staffing. We've repurposed 2 staff positions to fill vacancies. In addition to that, we declared do not fill positions to have a potential future savings of approximately $800,000. In addition to that, we are modifying our allotments and adjusting expenditures. We decreased department budgets by 10%, resulting in a $1.5 million savings. In addition to that, we decreased employee travel by 30%, which resulted in $194,291 savings. In addition to that, working with Mr. Tapia, we've implemented some systems to monitor the reduction of overtime payroll costs. In addition to that, we made some adjustments to our safety and security, resulting in a savings of $100,000 with our Guardian program at our campuses. We're going to leverage our Guardians against those outside law enforcement agencies that we contract out. So in addition to that, we're utilizing an implementation framework. again, we're studying the overlapping expenditures, and we'll continue this process as well. In addition to that, we're conducting a review of software licenses and district websites for potential savings, and as well as working with our partnering vendor to maximize our source funding generated for this particular year. I know we're already in, as compared to last year, we're about $32,000 more in SHARS revenue as compared to the previous year, working with our Onward, our vendor for SHARS.
And then in our next slide, it's going to be an audit update. So we have Matthew Montemayor here with us. We thought it would be appropriate to bring him up so he could kind of tell you what he's been up to with our audit, and just kind of give you a timeline of what to expect in the next month or so.
Before that happens, may I
Yes.
ask one question? On the safety and security element of this, with these adjustments, are we meeting all the state guidelines for security in terms of the personnel at each campus?
I believe so, and Mr. Castillo is here, but I think the law requires that the security be there during regular school hours.
Yes,
So
and-
we're meeting that as well.
I can speak to that. So yes, we are. So the savings actually came because, as you know, if we don't have, we have to have an armed presence during the regular school day. And so last year, two things. We had our guardians that came on, and so now we have changed our staffing formula. So when we looked at getting ready for this year, part of the savings is, number one, if we have the guardians at the campuses, we are in compliance. But that gives us a savings because because every hour that we have those vehicles, we have to pay for that. So the savings came from there. And then secondly, we went back to right-size our staffing. So with security guards, last year, we didn't change the staffing formula. This year, we did change the staffing formula. We reduced in security guards because we increased in a guardian. So
Thank you.
that's partially why we've got that savings.
Thank
But
you.
we are still in compliance.
Mr. Chairman,
Yes, sir.
one additional question. Mr. Mendoza, you may not be able to answer this question, but maybe you can give us information in the future. What is the potential savings in the overtime?
So actually, we did discuss that with, at our senior team meeting yesterday. Based on our conversation yesterday with Mr. Tapia and the senior team, possibly we're working hopefully around 200,000 for this coming year on the custodial side overtime in that particular area.
Perfect, thank you.
Can I go back to this? This is going to continue, this.
Because of the change of the staffing.
But it was 100,000 savings, not, we're short 2 million.
I'm gonna have to have them come back.
All right, well, good afternoon, Board Chair, members
Thanks
of
for
the
being here.
Finance Planning Committee. My name is Matthew Montemayor. I'm an audit partner with Carr, Riggs & Ingram, and I'm currently serving as the engagement partner over the district's external audit. And I thought in regards to providing an update today, I would start with providing a little bit of a high-level overview of the audit process and what that all entails, and then jump into kind of like an audit timeline of when we started the audit, where we stand today, and our expected completion date. And of course, answer any questions that any members of the committee may have. So to start off with the audit process, what I like to describe the audit process as consisting of primarily two components. So you have the audit of the financial statements, which is your basic financial statements and related note disclosures included in your audit report. And the second component is your audit of your federal awards. That's an audit over compliance. In regards to the audit of the financial statements, what we are engaged by the board is to audit your basic financial statements and render an opinion on whether or not your financial statements present fairly in all material respects in accordance with generally accepted accounting principles, GAAP. We call that GAAP. So in that financial statement audit environment, what we are doing is we're gathering sufficient appropriate audit evidence. I kind of describe it in a 4-stage approach, and the first stage being pre-client acceptance, pre-planning of the audit engagement. The second stage would be primarily risk assessment and an audit strategy development. This is the time where we would evaluate things like internal controls over the district. We would identify significant audit areas, and we would develop further audit procedures to respond to those risks that we have identified. And the third stage of the audit, what I would describe the third stage as being, is our audit execution. We're carrying out those audit procedures, and those audit procedures may involve confirmation with third party, external confirmations with third parties to confirm account balances. Some of those audit procedures may involve substantive analytics, also substantive tested details, or actually looking at detailed transactions and applying those against a set of attributes to test. And then finally, the fourth stage of the audit, what I like to describe the fourth stage of the audit being is our report and review stage. And that's where we are assisting in drafting the financial statements of the district. We're also reviewing the audit work papers. We're going through our own quality control process that we have internally as a firm to ensure all the work papers are documented and all the procedures that we had to do responded to the risk that we had identified. So that in scope is the overview of the audit process. Now, that was the first component. The second component of the audit of the federal awards, that same four-stage process is the same concept. It's just an audit over compliance. So the best way I could describe that is the district receives various federal grant funds, and those grant funds contain certain compliance requirements that have to be complied with. And so we obviously can't audit every single grant program of the district, but we apply a risk-based approach to select major programs to test, and we perform tests of compliance over those programs. So that is the second component of the audit process, which is the audit of compliance. Where we stand today, and in regards to the timeline of when we started, we were engaged by the board, I believe May of 2024 is when our official engagement letter was signed. We started in May to do some interim planning field work, which involved gaining all the necessary information we needed to conduct our risk assessment and audit strategy. That was about a week and a half of in-person field work here at the district. Then we received the district's final trial balance, so we call that the ASCII file of the district. We received that ASCII file, I believe, in September of 2024, at which time we scheduled to do some more in-person field work for our audit execution, that third stage that I just talked about. And that time of field work lasted about 2 weeks. And we were out here, I had a staff of about 4 staff with 1 audit manager overseeing and supervising the staff to ensure we conducted all the procedures that we had identified. And so that period ran and came and gone, and now we're in the fourth stage, which is working on reviewing all of our final work papers and ensuring that this report gets compiled together. There is certain components of this report that involve management's input, which is the transmittal letter, management's discussion analysis, stat schedules. We're currently working with Raymond and his team to ensure that those sections of the report get pulled together for a final report for the board. And the projected estimated time to complete and present to the board would be at the next November 12th board meeting, I believe. It would be a full board meeting where the audit report would be put on the agenda. The goal would be to in advance of that meeting, to have the draft financials in the hands of the board members, so you have a chance to review the audit report and the financials, the audited fund balance, and things of that nature, and the various exhibits ahead of the meeting. So that way, and it's a large report, over 200 pages. So, rather than have that the day of the meeting and cycle through all that in an open meeting, I think getting it to you in advance will allow you ample time to review it in advance. But that's what I have as an audit update for the committee. I think right now, like I mentioned, we're in the process of pulling this report together, but we're aiming for that target date to be here November 12th, and I don't see any constraints or any conflicts that get in there. So that's still the goal.
Thank you for being here. And can you tell us what that's going to look like? So the 12th you come, and will we have that report in advance, or we'll get it that same day? Could you give us an idea how that's going to?
For sure. So we normally do an exit conference with management, right? This audit report is, these financial statements are the responsibility of the district, right? These are your financial statements. So we like a chance to have an exit conference with management to go over this report in detail. We're currently scheduled for November 6th to have that exit conference, at which time we will look through these financial exhibits in detail, and barring any changes, that's when the packet would go out. I would anticipate the report to go out in your board packet, and I think that's within.
Got it. So the 6th, you'll meet
Right.
with the operational leadership of the district and go over
Correct.
that, exit sort of interview, kind of, so they have a preview, if you will,
Mhm.
of what's going to be presented to the board on the 12th of November. And then at some point, I guess, the superintendent, the CEO, you'll pass that on to us and on the Friday.
Yes, and I believe our
Before.
meeting is on a Wednesday,
Mhm.
on the 6th, and so 2 days later is when you'll get your report.
Got it.
And we'll probably have to hand deliver those to you all,
Yeah.
Thank you.
just so that you can have that.
For sure.
Okay. Thank you very much.
Question, Mr. Chairman.
Please, go for it.
Question, Mr. Montemayor, in regards to transaction testing, that portion you were mentioning, and I assume that part of that is, we're taking transactions from our bank statements and seeing that they're flowing to the financial statement, and that process makes sense and the amounts add up to what they're supposed to add up to. Is that a true statement or correct? more or
Yes,
less?
so that's pretty much a true statement, right? Transaction testing incorporates sampling, and it can involve transactions directly from your bank statement. It primarily involves transactions that are reflected in your general ledger. And so some of those transactions may flow through the bank statement. Some of those transactions might be represented by liabilities that haven't been paid, so haven't hit the bank statement. But the transaction detail testing is at the transaction level of transactions in the general ledger. And those are where we incorporate sampling for different audit areas, right? It might be if we're testing a capital asset activity of the district, we're going to sample additions to your capital asset records to ensure that they meet the appropriate criteria for classifying as a capital asset, and they're reflected in your depreciation schedule at the correct estimated useful lives, and they're being depreciated the way they should be. So that's the transaction detail level that I mentioned. Analytics, I know I briefly mentioned analytics, that's more high level. If we incorporated control testing and our risk and material misstatement is at a lower level, that's where standards allow you to do only substantive analytics in those situations. But other tested details would be more involved in items like revenue or other high-risk items that we've identified in our audit plan.
Are you testing at all against board expense policies, like levels of approval based on the amount of the transaction, whether or not the proper approvals were issued?
Yeah, that's a good question. So there's state compliance requirements of competitive bidding, and in every audit engagement, we have to ensure that we address compliance with laws and regulations and grant agreements. Mm-hmm. And so while I believe your district policy is anything over 50,000 requires board approval and competitive bidding, we would audit for that, and we have a sample of bid requirements that we do look into. Sometimes some districts will have more stringent requirements where anything over 25,000 is required board approval, and we lowered that threshold in those situations. But yes, to answer your question, we do look for approvals and board policies and ensuring that those approvals follow your board policies.
Thank you.
Well, and to follow up on that question, would be trends, looking at trends. I mean, so you might have totally fine that you're doing everything just as a policy states, but 2 years prior, you had 10 transactions, just under 50,000, that didn't require board approval. And then 1 year, it pops up to 40 transactions. Still follow the rules, but that's something we should look into as well. Are you following trends as well?
Yeah, so we would follow trends. We would look for anomalies like that. Unpredictable procedures would be involved, where typically we might not look at anything under 50,000. And we had a scope of those, or we had a population of those. Unpredictable procedure would be, hey, let's look at 10 of those transactions to ensure it was reasonable and it followed the correct policies and procedures in place at the district. So to answer your question, we do look at trends in regards to if there's been a significant increase in any one item, that would stand out in analytics and that we look at, and we would use that in our risk assessment process. When I mentioned risk assessment, we do preliminary analytics, preliminary look at balances like property tax revenue, state revenue. We look at ADA trends, and we see where that might create a risk in regards to the items reported in the financial statements. We would respond to that by developing further audit procedures to respond to that risk.
Yeah, and then, I think that trends is important, and I would ask, if this can be done by our November 12th board meeting to look at the last several years and find out were there outliers and were there anomalies like that? That's one good example. Obviously, we had a presentation today just of items that were outside of we were coloring outside the lines, you know what I mean? There were outside, several expenses just totally outside the budget. But I think even looking at a trend of how many items were under 50,000, I think it's something we should at least look at. Even if we find nothing, it's something to at least be aware of. Yeah, because as you said, there are other districts that go to 20,000, 25,000. Maybe we should, I don't know. I don't know the answer. But I think the only way you get to the answer is by looking at trends and looking at how you got there and why and that kind of thing. And so, because 50,000 doesn't sound like much when you have a $200 million, $180 million budget. But, you know, 49,000 times 200, I mean, now we're talking real money, you know what I'm saying? So I think it's worth unpacking that a little bit and looking into trends, especially the year we just had, right? With the, the fiscal decisions and lack of communication that we had this past year, especially, we need to know that, I think. And so,
I'll take note of that, Dr. Pettis, and ensure that by November 12th, if you'd like to present that question again, I can provide a more thorough response to that one.
thank you so much.
Yeah.
And I appreciate your excellent work and your availability for operational leadership and for the board officers and to ask you questions. Thank you for that.
Yeah, thank you. Thank you.
Any other questions for Mr. Montemayor?
I think we're good. Thank you.
Thank you.
Thank you.
And I would agree, his availability and just the way that he packages everything, super easy to understand, and that helps a lot. We can ask several questions, and he doesn't ever seem to get frustrated, so thank you for that. The other thing too, just a side note, is that we've talked a little bit about systems as well. And so part of our interview with Mr. Montemayor, we're going to have that discussion as well. Like, what are some system things that we may want to look at? What are some things that we may want to consider moving forward? So thank you for that. Thank you for the thorough update. So school finance, what a hot topic in our state. Mrs. Garcia and I were in Austin a couple of weeks ago, and it was definitely a topic that we all had time to just sit and ponder on. So I wanted to share 2 slides that we received when we were with our TSA partners. On the left-hand side, you see that from 2019, we have a basic allotment that has maintained the dollar amount of $61.60. We've spoken about that at these meetings and beyond. What I want to point out, though, is that when you look at the $61.60, you look at the red line right above that. In order to have the same buying power in 2019 today, we would need a total of about $7,500 of an allotment. And when you think about our enrollment and things of that nature, it's probably about $20 million or so. So all of these discussions that we're having, it's great that we're starting so early in the year, but I do want to also say that across the entire state, districts are having to have these types of conversations. What does that look like? What do expenditure modifications look like? And how are we going to make sure that with the fiscal resources we have, we're going to be able to stay true to what we're wanting to do for students? So I just wanted to kind of give that to you all. I think both of those visuals are impactful. Certainly as we continue to keep our ear to the ground at the state level, we're gonna come back and share that information with you. And then as we close this evening, I want to talk a little bit about looking ahead. We, earlier in our discussion, I talked about the power of reflection, right? Any continuous cycle of improvement is going to start there. I will also say that there's a lot of value in looking ahead and making sure that we're going to continue doing the great things that we've done in our district. And so part of our work today is, yes, to frame where we were, where we are, but it's also to talk about where we're headed. I think of our strategic plan, and if you look around our room, we've got our posters with those 5 super impactful goals. And when I think of our strategic plan, it is referred to as a plan for the people, by the people. because we brought them in to make sure that we were going to capture the voice of our school community. While we want to realize all of those goals, we also know that we have to do it within our adopted budget. So every month, as we're coming to you all, we will continue to keep our thumb on the attendance and also our enrollment. Those are two levers we're going to look at every month, because that's going to navigate whether or not we have to have modifications and allotments. Just like Mr. Mendoza spoke today, we did an adjustment of 10% to department budgets, and that's specifically to address the 1.7 deficit that we already knew we were going to have going into the school year. So every month that we come, we're going to have those discussions. The other thing is that we are big on systems, and as we look at moving forward, part of our conversations today were about systems. I think of the overtime system that we are implementing. Every month as a senior team, we're going to look at that overtime. Already yesterday, we were able to identify some outliers with some of our campuses, and so we're going to reach out to those campus principals and have conversations about what is the overtime, like tell us a little bit more about this, to be curious about those numbers, because that's how we're going to be able to create our systems. But it can't happen at the end of a semester or at the end of the year, so our system is going to call for a monthly review of that. And when we think of 220,000 or 400,000, wherever we end up with the savings of overtime, that's how we're going to do it, is those systems and coming in and starting at the senior team level, but then also expanding that to our principals. Because this is also a journey that they're on as well with all of our directors. So it's about this awareness at every level of the organization to look at our budgets. So that's part of as we move forward, we're going to be doing that. I also want to talk a little bit about future committee topics, because next month we will come to you all with some of the systems that we're already creating. We're in the process of creating those, but we want to come in and give you an insight into how we're going to have those control levers. Particularly in the business office, but I would say across the entire district, right? So we'll be bringing that forward. The other thing is that in January, you can expect that Mr. Tapia and Mr. Mendoza will bring a proposal for TRE. We've spoken about TRE. What we're doing right now is that Mr. Tapia is in the process of looking at all of our facility needs and then prioritizing those. So in January, you can expect an update on TRE and where we are with that. It's early enough in the year that we can say, here are our proposed priorities, but then as a team, we're going to have those discussions, right? So you can expect that in January. The other thing I just want to kind of come back to is that we have a few follow-up items that may come through an administrative update or through our meetings here, but we'll go back and look at some of the historical data around purchases of technology. That was a discussion that we had today, and so I certainly want to follow up with you all on that and give you more insight into some of the answers to your questions. We'll look at the consulting comparisons as well, look at the overtime, as I mentioned earlier, and then just take a deeper dive into some of the topics that you all had a discussion with Mr. Montemayor. So there may be policy changes that we're going to be coming forward with, but again, this committee gives us time to discuss that and to do a deeper dive. And I would say to educate all of us. You know, there's a lot of, finances is not an easy topic to understand, but when we do it at these meetings, you kind of take bite-sized chunks with that. And then lastly, I'll just say, we have to be fiscally responsible. And part of our role moving forward, part of my role moving forward, is going to be to continue working with the senior team and all of their direct reports. When we think of the adopted budget and staying within that adopted budget, it's going to take every single one of us coming together to make sure that we're going to live within those parameters and never lose sight of our strategic plan. And also, at the end of the day, we say this very often, and it's part of our strategic plan. Talent is universal, opportunities are not. So when we look at our fiscal resources, it's about that. It's about making sure that at the end of the day, we're going to have opportunities for kids that we know are going to set them on a very different trajectory. So all of that is coming our way. I'm excited about a lot of the things that we're going to be bringing forward. As you know, sometimes it takes us a little bit of time to be able to come and say, hey, here's our proposal. But I am proud of our senior team because we have worked together to look at everything that we're presenting today. But more than that, look to see what we're going to continue to do great for kids.
Thank you very much, Dr. Cortan. You know, if I can give some final comments, and of course, I'll welcome any questions or comments from the board as well. First of all, thank you for those comments, and thanks for this presentation. I think it was very helpful, although we still have a lot more information that's out there pending, and I think November is going to be very insightful as we have the now external audit and our auditable fund balance and our look back and our snapshot of how we're doing financially as a district. I think this is the ultimate sort of accountability test, but it is a retrospective, it is a look back, right? It's not a real time, you know, our external auditor is very important function, but it's not something that helps you real time. It's something that, it's a look back, right? It's retrospective. But it does give you an idea of how well the chief executive officer or the superintendent is managing the budget and managing, you know, being, you know, good, you know, stewards of taxpayer money, et cetera. And it gives a good idea how the business office is doing, of course. But it is a look back. So I appreciate your taking extreme ownership of one of the most important parts of the superintendent's job, which is to be, again, the chief executive officer, right? The chief budget officer, the chief financial officer, you know, the chief, you know, executive for the budget for the district. I mean, that's what you are. You have a lot of help in the business office, of course, but ultimately, only one person has the authority, right, the responsibility and the accountability of the budget and directs expenses, and that would be the superintendent. So we appreciate you for leaning in and taking this seriously and again, you know, some would refer that as the integrity triangle in the finance world and in the audit world. You know, the authority, responsibility, and accountability. That's the integrity triangle. So thank you for taking extreme ownership and taking that seriously to make sure that your senior team, your cabinet, and the business office is holding true to that. This is the only way that now we begin to manage a budget real time as we go and being good stewards of our taxpayer money and of our state money. And this is the only way we can get it right. And especially, as you said, align it to the strategic plan where we create opportunities and a great educational you know, environment for our students. But the good news is you have help, right? You don't have to do it alone, right? You have an incredible budget office. You know, the budget office is there. The finance office is there for you. The business office, rather, and that's their full-time job to help you kind of manage these things. The board also has help. We have an internal auditor, and we, you know, again, want to set our expectations. This is something that our internal auditor should be all over, right? This is more important than managing a cash fund at a school or this, that, the other, which is important too. But coloring within the lines, staying within our budget is the most critical part of our budget, right? And so we expect our internal auditor to, again, come straight to the board, because you report to the board, obviously, Nellie, and we're lucky to have you, but we expect our internal auditor to blow the whistle on anything that looks shady, any color outside the book, you know, outside the lines. That should be something that we should know about. So this is the only way, with better communication from the superintendent to the board, which hasn't happened over the past year. So many expenses that we didn't know about, that were, again, coloring outside the lines. But with better communication from the superintendent to the board, better communication from the business office, superintendent, working together, managing that budget as far as staying within the budget. And of course, with another added gift of our internal auditor, that again is real time in the district, right? Our external auditor, again, it's retrospective. I hope that we can all sort of now come together and going forward have much better. And I love the way you presented you're looking forward and the different things you're going to be doing and different internal controls we're going to put into place so this doesn't happen again. We don't know how lower fund balance is going to go, but based on what you just presented today, it's not looking good. But one final thing I'll say, and it is also, it's good news. The good news is, we're not in the red. It's number one. We may not have the 2.5 months and that kind of stuff that we need to be a healthy balance sheet. But the good news is that we're not in the red, number one. Number two, we identified it pretty darn early, actually. And so now we're able to make these changes, internal controls going forward at a time when, and I'll remind you, and you showed some slides, last biennium, right? I was just in Austin, had a great presentation that I heard that showed clearly that they held back $4 billion, right, from public school funding last biennium. That was $4 billion that they held back, the state legislature. We already know that it's going to be $19 billion surplus this biennium. So I have full faith in our state leadership and our leaders, our elected officials in the House and the Senate and the governor's office. I have full faith that they will restore funding to public schools in a huge way. I don't know what that looks like, but I have faith that they will do the right thing. We know they're going to do other things. We know the vouchers are out there and other kinds of things like that, and they got a lot of other money to spend and a lot of other things to consider, like compressing taxes once again for property tax relief. We don't know, but at the end of the day, we hope, and I think with our, the wisdom of our elected officials, we know that there's going to be a huge increase in public school funding. And so there's help coming. But it's going to really help before then if we can stay within the budget and not spend over our budget. And so that's why I'm really, really proud of you, Dr. Cortan, leaning in to really, be a very sound, fiscally responsible CEO of a district. And I just can't thank you enough for taking this super seriously and for getting us sort of the trains back on the track and going and picking up steam again. So with that, I'll just see if any other board members have any comments for Dr. Cortan or business office or external auditor, any final words? Mr. President?
I want to thank you, Dr. Cortan. Talking about overtime, you and your staff have been working overtime to sort out all the issues that we have right now. I think this has been a very informative presentation today. I want to thank you, Matt Montemayor. Thank you for coming. The variances, the actual expenditures, revenue, and the variances is a good start on where we need to go, what we need to correct. The savings that in the internal controls that you all are implementing, I think we're headed in the right direction. It's not something that's going to happen overnight. And like you said, it's going to take everybody in the district working together, all departments, all campuses working together. I'm really proud, too, that I understand we've had a 10% cut throughout the district, and I know that's hard, but everybody's pitched in and everybody's working together. And again, I want to thank you for your leadership in taking control of this, and I think, we're going to get there. It's just going to take a little bit of time. Thank you so much.
Dr. Pettis?
Yes, sir.
And I also, too, want to piggyback on Mr. Powers' comments. It's not lost on me, Dr. Cortan, that you're not only the chief business officer, you're the chief musician, you're the chief athletics officer, you're the chief curriculum officer, you're the boss, and you're doing it as an intern. And oh, by the way, we're unpacking last year's financial, the events that happened and occurred, and we're doing all that. And at the same time, we're showing up day to day to do the very best we can for our kids. And at the same time, we're planning for next year's budget to make sure that some of the things, some of the lessons learned are applied in full view. Thank you for taking all that on. It's a heavy weight that you're carrying and that your team is carrying. And everybody's just doing a fantastic job, and we're going to get through this one step at a time. Dr. Pettis brought up the topic of internal audit, and I wanted to just mention that since you're here, Nellie, and I'm just one voice, but what I'd like to see from internal audit, just for the community's knowledge, the internal auditor works for the board, not for the superintendent. And so I'm just one of
of the trustees, but I'd like the office to consider a risk assessment moving forward of the activities that go on in the district, you know, moving forward, like, of what we know from last year. You probably do have a list of the activities that are the riskiest things that go on in a district, but I think we've learned a lot over the last year. That might need to be updated. And then the limited time that you have to go through each of the departments might need to be adjusted by percentage. The biggest percentage of your time and your team's time should be spent on the areas with the greatest risk to the district. And so what I would individually ask is that you put together an assessment of the risks in the district, and then dedicate your time that matches up with those risks as a percentage. And I'm sure my colleagues have thoughts on that too, but that's just feedback from me. But thank you.
Yeah, and again, very important reminder, those are excellent comments, but very important reminder that that what you just described, Mr. Leal, is the independence of the internal auditor, and it's very important. Because you report just to the board, you're completely independent, and so there is no way you should ever be intimidated or afraid of sort of unpacking anything that comes from the superintendent's office, because you are an extension of the board. So by definition, you're totally independent of the operational element, beginning with the CEO or the superintendent. So very important, that independence in the internal auditor world, because that independence is everything, and it becomes a really important oversight and accountability mechanism for the shareholders, of course, for the taxpayers, and the community. So thank you for that, and thanks for those comments. Yes,
Mr. Chairman, just a real quick, one of my favorite quotes is from Peter Drucker. You can't really manage what you can't measure. And so it's excellent that we're measuring this now. Also, and that's economics, right? Talking about economics, having those levers, you mentioned those levers. It's great that we're talking about the levers, the attendance is super critical, as we know. Just repeating this for the audience. And it's super critical regarding enrollment, right? Attendance and enrollment. Those are some of our biggest levers. But there's probably more that we need to be looking at as well. And that's from the income side. There's also those levers from the expense side that we should be measuring. That's top three, the Pareto's rule, right? 80-20, figuring out what those are and really focusing on those things. So I'm glad that we're doing this. It's a road that we're taking. This is something I want to say, Greg Bowers, this is your idea, and I appreciate you coming up with this idea. And Dr. Pettis, I appreciate you taking on the idea, because if we weren't doing this, we'd be in trouble. So thank you.
Absolutely.
Just
Dr. Reinger.
one final comment. I too appreciate the information today. I think this was, it's always good to look into the details. And so today was a good step forward, and I appreciate that. I'm just building off of Dr. Muniz's comment about the levers that we have, and at the point we have been, we were looking at expenses. Absolutely, we got to get a handle on that. I do think there are a number of opportunities for revenue and growing that, and kind of thinking with our principals, our senior team, and certainly you have many ideas, Dr. Cortan. So thinking about revenue generation as well, because we can. There's work that we can do in that area, and it balances both the balance sheet and the work of cutting more quickly. So thank you for considering all of that as we go forward.
And next month's topic at Transforming Teaching and Learning is actually our measurable outcomes. And so I'm sure that Mrs. Garcia is writing notes down, because she's our data guru. But great points, and thank you all so much for the feedback.
Awesome. With that, thank you all for being here. Meeting adjourned.